We're finishing up the last day of January with the S&P ready to notch a 7% gain, but some mixed earnings is throwing some dirt into the picture. Joining me, we missed him last week, is Matt Cheslock from Virtu Financial. Hi, Matt. How you doing?
Good. We're taking out of a thaw here, but, market's doing all right,
Sure. Yeah, the market's defrosting too a little bit. You know what? My only concern, Matt, is the lack of volume. What's your expertise?
Wow. That's a good question. I did notice it the other day. It seems to be a lot of volume is being traded in single names, meaning that if there's a news story or if there's earnings related story, that stock is getting a lot of the volume, and we're not seeing the overflow. We're not seeing that passive investment going across whole sectors. Meaning last year when we saw earnings come out in one particular, let's say financial, we saw all the financials would rock. They would be moving. We're not seeing that. We're seeing single names just receive all that volume right now.
That's a really good point. And we got a Fed decision yesterday. They didn't move. Now, they always call them the smarty pants of the room, the bond guys. Jeffrey Gundlach said that Jerome Powell caved to the market. What do you think about that? Is Jerome Powell scared of us?
Did he cave to the market? Did he cave to Donald Trump? I mean, that's the question. And that was the concern. The Fed was always going to be independent. But if he moved in this manner, what does that say? Who's wagging who, or who's the dog and who's the tail? But the market definitely liked it, and they liked the fact that they said that they were going to hold back on the balance sheet as well, and that was the key driver for yesterday's rally.
It helped. And another key driver, earnings, right? We did get some mixed earnings. We have Amazon tonight. What are your expectations, Matt?
Well, these things have been talked down pretty aggressively. Look at a stock like Apple. They were rewarded for, guiding lower earlier. So they took the pain early, and then they beat. Amazon now has so many different avenues where they can mark up their earnings. Like, Apple's not worried about the iPhone anymore. They have all these ancillary money sources. And Amazon's going to have the same kind of thing. So if there's one sector that's down, they may focus on where they're doing really well, and they could be rewarded for that.
Exactly. And we also have some economic data to go about. We had a nice ADP number, NFP this Friday. Next week, we get core inflation, ISM. What's your predictions with the survey data, considering all the transitions we made in January?
I think it's kind of meaningless with the government shutdown and stuff. You have all these excuses now built in with the government shutdown, the China talks. So these aren't really going to be a whole lot going on right now. You're looking at what we're seeing in Europe and Asia. The numbers are down over there. So that's probably more alarming because that's probably more relatable. Like you can say, month to month. We now have a month or two where we're going to be catching up and trying to rejigger numbers. So it'll be interesting to see. I'm not going to put a whole lot of credence in January's numbers.
All right. We're also looking forward to the forecast by Mr. Groundhog on Saturday to see if we're going to get an early spring or not.
Guy, he's not digging out this weekend. This ground's frozen solid.
Hopefully he didn't freeze over.
Yeah, we're not seeing him. He's not even making it.
All right. And Matt, one more question. Rams or Patriots?
You know what? I think you got to play Tom Brady until he decides to hang him up. That's just the way it works. So I'm playing paddle that day. So
Nice.
Super Bowl's ancillary.
All right, cool. Maybe you can get back, have a drink, and some nice buffalo chicken dip after burning those calories.
I'm in. Thank you.
Thank you so much, Matt. See you next Thursday.